Welcome back to Daily Crypto Report, where we simplify the complexities of finance, technology, and cryptocurrency. Today, we're diving into a fascinating topic: how MicroStrategy raises money to buy Bitcoin. If you've ever wondered how this company became one of the largest corporate Bitcoin holders in the world, with over 439,000 Bitcoin as of December 2024, stick around, we're breaking it all down step by step. First, let's start with some background. MicroStrategy is a publicly traded business intelligence company founded in 1989 by Michael Saylor and Sanju Bansal. Its primary business is providing enterprise software solutions, but in recent years, MicroStrategy has become synonymous with Bitcoin. Michael Saylor, the company's executive chairman and former CEO, is a vocal Bitcoin advocate. Under his leadership, MicroStrategy adopted Bitcoin as a key part of its corporate strategy, citing its potential as a store of value and hedge against inflation. But how does MicroStrategy afford to make such massive Bitcoin purchases? Let's break it down. MicroStrategy's Bitcoin journey began in August 2020, when it announced it would use its cash reserves to buy Bitcoin. At the time, the company held over $500 million in cash. Instead of letting that money sit idle in low-yield investments, Saylor and his team decided to convert a significant portion into Bitcoin. The rationale? They believed Bitcoin offered a better long-term store of value compared to cash, which loses purchasing power due to inflation. This initial investment laid the foundation for what would become an aggressive Bitcoin acquisition strategy. One of the primary ways MicroStrategy raises money for Bitcoin purchases is through the issuance of convertible notes. Convertible notes are a type of debt security. They allow the company to borrow money from investors with the promise of paying it back with interest. These notes are convertible, meaning that under certain conditions, they can be converted into shares of the company's stock. For example, in December 2020, MicroStrategy issued $650 million in convertible notes to institutional investors. The interest rate was incredibly low, just 0.75% per year, making it a relatively cheap way to raise funds. The proceeds from these notes were used entirely to buy Bitcoin. This strategy has proven effective because many institutional investors see MicroStrategy's Bitcoin holdings as a unique value proposition, especially in a low interest rate environment. Another method MicroStrategy uses to raise money is by issuing senior secured notes. Unlike convertible notes, these are backed by collateral, typically the company's assets or Bitcoin holdings. For example, in June 2021, MicroStrategy issued $500 million in senior secured notes. These came with a higher interest rate of 6.125%, reflecting the added risk for investors. However, the company was able to secure this funding because its Bitcoin holdings were viewed as valuable collateral. This strategy highlights MicroStrategy's confidence in Bitcoin's long-term value. By leveraging their Bitcoin, they effectively use it to acquire even more Bitcoin. MicroStrategy has also raised money through equity offerings, which involve selling shares of its stock to raise funds. For instance, in September 2021, MicroStrategy announced a plan to sell up to $1 billion in stock, with the proceeds earmarked for Bitcoin purchases. By issuing more shares, the company taps into the market's enthusiasm for both its stock and its Bitcoin strategy. The risk here is stock dilution. Issuing new shares can reduce the value of existing shares, but investors seem to accept this trade-off given the company's strong focus on Bitcoin. Recently, MicroStrategy has even explored the option of Bitcoin-backed loans. In March 2022, the company borrowed $205 million from Silvergate Bank, using a portion of its Bitcoin holdings as collateral. This is a fascinating strategy because it effectively allows MicroStrategy to leverage its Bitcoin to acquire more Bitcoin without selling any of its existing holdings. It's a high-risk, high-reward approach that reflects their deep conviction in Bitcoin's long-term potential. However, this also exposes the company to risks if Bitcoin's price drops significantly. In such scenarios, they could face margin calls or liquidation of their collateral. You might be wondering, why do these strategies work for MicroStrategy? The answer lies in the company's unique position as both a software business and a Bitcoin investment vehicle. By generating steady revenue from its software business, MicroStrategy can cover its operating costs and debt obligations. This provides a safety net, allowing them to take bold financial steps like issuing debt or equity for Bitcoin purchases. Additionally, Michael Saylor's relentless advocacy for Bitcoin has attracted a loyal following among investors who share his vision. This has helped MicroStrategy secure favorable terms for its funding initiatives. Let's talk about the impact of these Bitcoin purchases on MicroStrategy's stock price. The company's stock, traded under the ticker MSTR, has become closely correlated with Bitcoin's price. When Bitcoin's price rises, MSTR often sees significant gains as investors view the company as a proxy for investing in Bitcoin. Conversely, when Bitcoin's price falls, MSTR experiences similar declines. This dynamic has transformed MicroStrategy into a unique hybrid, part software company, part Bitcoin investment vehicle. While this has attracted crypto enthusiasts, it also adds volatility and risk for traditional investors. While MicroStrategy's Bitcoin strategy has been groundbreaking, it's not without risks. The company is highly exposed to Bitcoin's price volatility, which can impact its financial health and stock performance. Additionally, raising funds through debt and equity comes with its own set of challenges. High levels of debt increase financial risk, especially if interest rates rise or Bitcoin's price declines. Despite these risks, Michael Saylor and his team remain steadfast in their belief that Bitcoin will outperform other assets over the long term. MicroStrategy's innovative strategies for raising money to buy Bitcoin have made it a pioneer in the corporate crypto space. From using corporate cash reserves to issuing debt, equity, and even Bitcoin-backed loans, the company has shown remarkable creativity and conviction. Whether you see MicroStrategy's approach as visionary or risky, there's no denying its impact on the cryptocurrency market and the broader conversation about Bitcoin as a corporate treasury asset. What do you think about MicroStrategy's bold Bitcoin strategy? Let me know in the comments below. And if you enjoyed this deep dive, don't forget to like, subscribe, and hit the notification bell so you never miss an update. Thanks for watching, and I'll see you in the next one.